What's your take on all of this? Is this going to be enough, or do we really need to hear from the Ministry of Finance?
The answer for China is very clear. It needs to throw money at the problem. Specifically, the central government needs to help the local governments and also the weakness in consumption. So the markets were looking for, after a very concerted and coordinated effort with monetary policy, where we have triple R cuts, where policy rate cut, and then we also help with the real estate sector and recapitalization of banks. We need to put money into the local government pockets, into consumption. And today we do not have the details. In fact, markets were looking specifically at a specific number, which is 2 to 3 trillion in size. Now, the reason for that is that we have shortfall in the local government revenue, which means that they met that by lowering expenditure. So we do need money to pay salaries to make sure that spending is being met. Otherwise, if you look at consumption, it's been weakening downward. Secondly, we need support for the consumption sector, right? In forms of people wanted to see that, and we have yet seen that. So therefore, if you look at the divergence between mainland and offshore in terms of Hang Seng, it's really because the fact that we were open, so there were quite rallying and expectations, and now there's a pushback. We will need more concerted effort on the fiscal side. The central government needs to take on its balance sheet to put bolster consumption, and we need to see that for the market to continue to rally.
So maybe Hong Kong is a case of sell the news this morning, given that we do have the mainland markets playing a bit of catch-ups there. But back to your point about the 2 to 3 trillion, and really the markets are crying out for this specific number. You say that it does need to help out to, this sort of eye-watering local government debt, and there seems to be some thinking that the markets are sort of mentally budgeting for this, based on reporting, of course, that this would go towards helping that consumption scheme with the trade-in program and the upgrading sort of scheme that they've come out with, but also to help with the household stipends and the local governments. Is 2 trillion enough?
Well, I think it certainly will help with the growth target that they need to reach by the end of the year, which we only have 2 more months. So it does need to help disperse more money and more importantly for 2025, right? Before the stimulus news, people were busy downgrading China forecasts, right? And not just 2024, but 2025. Some upgrades have been made to 2025 now, and so we're looking forward to the future where we have the government. We need the government to put a floor to deceleration of the real estate sector, which has meaningful translation to wealth effects. There was some positive wealth effects in terms of financial assets, but that is not enough because the confidence, as you can see today, is very short-lived, and we need the government to show that it's very concerted on the fiscal side to really lend in support, and it has space to do so. Central government debt is only 24% of GDP. China has a big debt problem, but not on the central government side.
But